I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, let's start off by talking about your Real Money column. You wrote about Nucor and steel, and with you have over 40 years experience trading steel.
Well, I was always a fanatic about steel. Do you know that I mentioned Bethlehem Steel in that piece.
But you live near it.
Yes, after we shorted Bethlehem Steel, a stray cat landed with us, and we called her Bessie, because the symbol for Bethlehem Steel was BS, and Bessie. Everyone called Bethlehem Steel BS. She lived a very long time, and we lived off the short for a very long time. Because what happened, they were going to scheduled to earn people have to understand how steel mills work. They were scheduled to earn $26. It was selling at 2 times earnings. And then, of course, they ended up losing money, because that's what happens. That's why I always remember, when you see that multiple really shrink, that's what people worry about with Micron. That means they're not going to make the earnings estimates. And Bethlehem Steel had the biggest miss I've ever seen. And then they canceled a preferred that I had sold when I was at Goldman. And then I had recommended people short it. I got investigated for why I was shorted. I said, okay, listen, I know business cycles, and you've got to understand that they are going to lose money. And it was like, that's impossible. But they did. So then you have to do the opposite. When you get those price increases, that means that inventories are so low. And what happens is it's not $40 in 1 week and then $40 next. It has a momentum. And these steel mills, right now, Nucor's it's about 83% capacity. You can't, by the way, operate on 100 capacity without fires happening. But they get up to, say, 95% capacity and you get these rate hikes. You start having estimates that are so low that you'll say, why did I not buy every share of Nucor? And I think we're close to that. Now, I will work more on Nucor for action alerts this weekend, because we made some money last time, and I stuck my head in the lion's den. But this was truly the beginning. Just like I knew the end, Bethlehem Steel, I know the beginning when I see one. It's beginning.
Now, if I'm an investor, like some of you, who may not know how to trade steel, what should my first step be?
All right, well, first you want to analyze whether the dividend is safe. Nucor has remarkable cash flow, okay, remarkable. Second, you want to be sure that you're not in just hot rolled steel. That's the old commodity steel that tends to not have a lot of value. You want to be in higher value steel, which Nucor has done. And then you want to see whether they closed capacity so they can't take advantage of the price increases, or added capacity. Nucor added capacity. They played this thing like a fiddle, except for they didn't see the bulge in inventories that would come literally from, he said, media hysteria that made all these steel service centers, he owns some, buy more steel than they needed. And so they finally worked off what he calls the bad steel, which is the heavy inventory. The Chinese can no longer dump because of 232. So you're going to have it. This is the cycle. No one believes. All the analysts are all skeptical. They talked about cutting numbers after pre-announcement. This is the moment to buy Nucor.
All right, Jim, now, my next topic. I know you're going to want to talk about it, but we got to save a lot of it for our AAP, our Action Alerts Plus Daily Rundown show. But our next topic is Microsoft, because it's our real money stock of the day. I know.
We don't own Nucor. Look, we got out of Nucor. Thank heaven. We've had a big loss. I'm very proud of what we've done with Microsoft, but I'm more proud of the work, obviously, that Satya Nadella has done. They're an amazing cloud company. They're an amazing PC company. They're an amazing gaming company. They're amazing social because of LinkedIn. This quiet man, Satya Nadella, a quiet, inspirational man whom when I had the privilege of having breakfast with him, all I wanted to talk about was STEM and second graders and how to be cool enough to attract them. And there was a presence to this man. And I said, we have to own this stock for Action Alert. And we've had a great run, and we're not selling anymore.
And we'll be breaking down the earnings, as I said earlier, over on Action Alerts Plus. But Jim, my question
Great memo. Jeff Marks did a fabulous memo last night. I was going to send it to Satya because I thought it was the best of all the research that I saw. The piece that we wrote was absolutely the best. I was proud of it. I sent to Satya a note, just, bravo. But I should have included our note because it was so much better than the rest of the research.
You can still send them to it.
Yes.
So I do want to talk about, there's been multiple headlines from Microsoft, and one such headline that I think we should hit on is the Jedi contract. Now there's two parts to this.
No, I mean the president. Does he intervene?
Yeah, that's one part. And then the second part is that it's reported that Microsoft and Amazon might both get the contract.
Well, that would make sense. Boy, it's amazing that Alphabet isn't part of the equation, isn't Google Cloud? That makes sense. Amazon Web Services, one of the things that I was trying to, David was kidding me, but I am a huge believer that there are some companies that are so amazing. Amazon Web Services growing at 40%, these guys growing faster. This is amazing. People, you have to understand, this has never happened. And it's why Microsoft at $1 trillion does not mean it's expensive.
Is Azure catching up to AWS, or are investors' heads just in the cloud?
That's a great question. And I got to see what AWS does this quarter. I would say that Azure's catching up.
All right, Jim, now
How about the fact that Boeing puts a cap on how much and the stock flies? These are, put yourself in your shoes yesterday at this time. You know, one quarter after another after quarter were disappointing. And we all gave up on the market, and then the Fed spoke, and the market is back. This is very interesting because it has to do with why I don't like earnings season. Earnings season is bipolar, manic depressive. They don't use that term anymore, the psychiatrists. But what it is, I mean, you're in a situation where yesterday everything was bad, and today everything's good, and neither's true. Okay?
Well, everything was bad until afternoon, as you said, when the Fed spoke.
Right.
Speaking of the Fed, though, New York President John Williams spoke, sounded very dovish.
Yes.
And now, he's walked back those comments a little bit.
Well, right. The president said he likes one. Fed President one. Look, it is hard. When I Brian Moynihan on last night, the consumer's probably, he said, the strongest he's ever seen. Industrial slowed down. Business slowed down. So if you're, look, if you're Jay Powell and you're worried about income inequality, you're worried about minority hiring, you're worried about the hiring of, let's say, of African Americans. We just mentioned it because that's the term they use. I'm trying not to single anybody out because I don't want to be race oriented. But you lower your rates so these fine people can get jobs, as my father would say. I mean, but I want the pie to expand. Lyndon Johnson, big pie. And I think that he has a chance to do that. And it's really tremendous for the underemployed people in this country who have been underpaid, grew up in places where where they don't even have kindergarten, they don't even have playgrounds, they don't have sports teams. So he's doing his part. I think he's thinking now much more toward societal things than he is pressure the president. And I'm very proud of him now. He's really gotten his head around what has to happen in this great country of ours.
Circling back to Williams' comments, though, do you think that, let's see, the Wall Street wants a rate cut this month. Do you think that Williams threw Wall Street a bone?
I don't want to have this 50 basis point story because they don't need that. They just need to take back the one hike that was too many. But Larry Fink was on our network this morning talking about how high our rates are versus Bulgaria. And I think he just picked that country, but 0.68 for them, the 10-year. There's room to cut. And there's nothing wrong. I did a piece on this for Real Money. There's absolutely nothing wrong with trying to stimulate the economy when inflation is low. There's nothing wrong with doing that. His job is to try to keep a good economy. He wants a good economy. And he's giving us a good economy. Better than we had. Brian Moynihan was talking about okay, shift the good, back to okay. Okay being okay. And he wants it back to be good. And it will take a rate cut to do that. So it will do for my Nucor thesis. They need the rate cut.
All right, and finally, I want to give our viewers a little bit of an insight into our morning meeting because...
I thought you were talking about Ozzy Fest that I'm
on
Sunday at Central Park, where I'll be talking to the brilliant Mark Lassery, who owns the Milwaukee Bucks, a billionaire, and then doing a kind of a Shark Tanky thing, and I'm very excited.
That sounds so exciting. So what I wanted to talk to you... It's going to be so hot. This morning I asked my Alexa, I was like, what's the weather going to be like? And she was like, heat advisory.
Heat advisory?
Through Sunday.
My staff told me to wear a kind of a dark shirt that wouldn't show sweat stains.
You're going to go more casual than this,
by the
right?
way, has a great thing about that. So I do have a J. Crew shirt that I think will work.
Oh, good. I'm glad.
I said I have never appeared outside without a suit. And they said, listen, you can't wear a suit.
This might be the first time for you, Jim.
So I am going to break form. I don't like it. I'm uncomfortable, but I'm going to do it.
It's okay. We all understand the heat advisory. So, Jim, this morning in our morning meeting, you brought up a term that I think is really important for our viewers. Now, that term is IPS. Can you explain what that means and why it's important?
I'm talking about impact per share. something that Brian Moynihan, a great, really, my friend Jeff Sonnenfeld is embracing it too from Yale. We're talking about if you, in the new generation, if you want the best people, you have to be talking about your societal impact. And I'm not just talking about sustainability. Like, people want to know about what's your footprint. People want to know what you're giving back. People want to know what's your game plan to help employees in bad times. How do you feel about gender equality, protection for minorities that are abused in this country? And what I think that he said, if I want to attract the right people, and they're paying $130,000 on average people, I have to do that. And I have now pivoted this year. I don't know if people have noticed, but I was with another executive yesterday, Ed Stack, about this. He's the CEO of Dick's. I pivoted pretty aggressively toward having the end of my interviews be about impact per share. Thank you, Mark Benioff, for really telling me, Jim, I want to become more relevant. And thank you to CC Cramer, who has said, Dad, really, you've got to change. You have you're 64, you have a platform, you can ask about these things. You can ask a plastic CEO about the island and Pacific. You can ask people what they do. Do they have equal pay, gender pay? How much? What are they doing to save the planet? And impact per share is very important, because if you don't, as Brian Moynihan said, the qualified people will go elsewhere. So I'm very proud of this. It's a big change. Regina Gilgan has done it too. It is not like me.
Regina's your president, your producer for...
This is not like me, okay? I grew up in a Goldman Sachs era where what mattered is cash flow, EBITDA, making a quarter, trying to understand whether management's good. And I always felt that everything else was extraneous, because if you made a lot of money in the market, then you could give money to your cause, charity. That's what I've been saying. That's been my rap since 1987, when I went out on my own as a hedge fund manager. And it's no longer my rap. My rap is, I want to know what you're doing for society, and I'm going to ask everybody at the end of every interview for impact per share. And that way, Cece, my daughter, my precious daughter, whom I love so much, will understand that I get. She does a lot of counseling of trouble, at risk youth, and I'm going to do what she advises. And Mark Benioff has helped me immensely that this is the pivot that I have to do. So I'm quite proud that this is what I think I can so-called get away with, because I've been tough all my life on executives, including some I've been meeting. And we're going to really make it so that people get, there's another side to the story. And fortunately, to me, I've seen the light. I don't mean to be facetious. I've read the Dalai Lama, I've read Gandhi, I joke about these things. What I recognize is that in order to stay relevant, I have to care about things beyond earnings per share. So I've adopted impact per share, because I can play my role in trying to help the planet. It's small, but I have to, my daughter would say, she doesn't like that I have, this is a good example. I have plastic bottles, water, because I can't have a bad back, so I can't lift the big thing. And she said, look, Dad, I really can't, when I go to your house, and she lives in Oregon, and I open the refrigerator and I see the plastic, Dad, I want to leave. And I said, but see, what does it matter? I recycle. She says, no, Dad, we must change our ways one by one. And if I can change ways bigger with impact per share, I am going to do it. You're going to see it for as long as I do Mad Money.
I think it's very admirable.
Thank you very much.
All right, Jim, so that's all the time that we have for today. Thank you, and I hope that you stay cool this weekend.
Oh, well, I'm gardening on Saturday. It's going to be, I'll probably have to water a couple times. You have to be careful, because the water shines, and sometimes what happens is that you can burn your flowers. And then Sunday, Aussie Fest, the heat is not going to help the garden. We need more bees, if you have bees. I should get a hive. I know, that's next year's business.
Next year's plan. All right, Jim. Thank you so much for joining us again. All right, guys, for all of you watching on TheStreet.com or on Facebook, we are now switching over to our Action Alerts Plus Daily Rundown show, where, as I said at the top of the show, we'll be talking about Microsoft's earnings, so you got to tune in. I'm Catherine Ross, and we'll see you on Monday.